Welcome, dear traders. After a modest rise on Wall Street yesterday, Asian stock markets are trading mixed. Japanese stock indexes are falling while Australian shares are growing. Asian stocks are declining amid fears of a global inflation and the health of the US inflation data. A strong non-farm payrolls report is still impacting market sentiment. The geopolitical crisis in Europe, tensions over Taiwan, and the slowdown in China's economic growth are also weighing on the stock market. The news that the US labor market has reached pre-pandemic levels increased the likelihood of more aggressive rate hikes. Now, traders are anticipating US inflation data, which is due tomorrow. Despite upbeat labor data, analysts do not forget about the slowdown in the US economy and the possibility of a technical recession. Nvidia's earnings report revealed yesterday reminded investors about such risks. The semiconductor shortage has adversely affected the revenues of this tech giant. The company also slashed its annual forecast for margins and profit. Nevertheless, the Fed's main priority now is to take inflation under control rather than stimulate the economy. Besides, the Fed adjusts its monetary decisions based on a fresh macro stats. In other words, it does not have a certain plan. The US Senate approved a program aimed at reducing inflationary pressure in the country. It passed a $430 billion climate change, healthcare, and a tax bill. As long as the central bank sticks to a hawkish stance, the US dollar will maintain its bullish momentum. It's also climbing as a safe haven asset amid the coronavirus spread in Asia. Its appeal as a safe haven asset is even bigger compared to US Treasuries. Its rally also brings gains to traders. Yet, sometimes US government bond yields decrease due to rate hikes by major central banks, which is bearish for the greenback. Today, US Treasury yields have slightly climbed, facilitating a rise in the United States dollar. In the Asian session, the greenback was trading steadily near a recent high of 106. Apparently, a significant decline in the US dollar index may lead to a drop in the US dollar as well. For this reason, it's likely to consolidate in the range of 106.08 and 106.41. Speculators will remain cautious ahead of the CPI report. The overheated US economy and aggressive rate hikes are bullish for the US dollar. However, these are negative factors for other safe haven currencies. The yen remains the main outsider. It's weakening due to the widening rate gap between the United States and Japan and rising US government bond yields. Curiously enough, it's more sensitive to changes in the US government bond yields than the risks of a global recession. Analysts believe that the situation will hardly change unless risk appetite improves. In the long-term prospect, analysts see the upward potential for the yen. For instance, the yen may once meet a slowdown in the US economic growth. However, it's now sliding down due to a large trade deficit and the high energy prices. However, today, the yen added modest gains amid the consolidation of the US dollar. It reached the level of 134.87, and the dollar-yen pair may retreat significantly to the range of 134.63 and 135.16 before the release of the CPI data. If so, the during the day. Looking ahead, the yen could also rise slightly thanks to a drop in the US dollar index. According to the Fed statements, inflationary pressure is seen in a broad-based basket of goods and services. The Australian dollar gained 1% in overnight trading. In the Asian session, it was fluctuating in the price corridor of 0.6965 and 0.6995. The Aussie has a high correlation with the US stock market. On a Monday, the risk of sentiment prevailed there. The Aussie may face bearish pressure due to the publication of Australia's Consumer Confidence Index. In the Asian session, session, the AUD USD pair was trading at 0.6981. After the Reserve Bank of Australia raised the interest rate to 1.85%, inflation expectations jumped to 5.6%, and this figure was the lowest since April 2020, even despite a decline in the gasoline prices for the first week in a row. However, the Australian dollar, which is vulnerable to changes in energy prices, managed to climb amid rising prices for copper and iron ore, as well as renewed demand for many commodities in China, Australia's main trading partner. And that's all for now. Subscribe to our channel and stay up to date with the latest market news. Feel free to leave your comments down below and see you soon.